Okay, so you know that your overhead cost is maybe 150,000 or 200. Just leave that aside. Do you understand? Okay, so now you already know your cost of production and you know your overhead cost. So now, how do you calculate your profit? Now we have the gross profit and we also have the net profit. So the gross profit is different from the net profit. Your gross profit is when you calculate all your total revenue. That is, maybe you do training, that's your sale. Okay, you sell material, you sell headwares, that's your sales revenue. And then maybe you do trainings and all that, so you also have some service revenue. So you have so many incomes like coming in. So you have your total revenue. This is your total revenue now. This is everything that's coming in for you, minus your cost of production. Just leave the overhead cost now. So your cost of production is, and your materials like the labor, the packaging, those are your direct costs. That's your cost of production. Do you understand? That's the cost of sales of good. So you calculate your total revenue minus, when I say revenue, that is everything coming in, your total income, everything coming in minus your cost of production. Whatever you get, that's your gross profit. So a lot of us only calculate gross profits and we don't calculate the net profit. The net profit is actually what remains with us. So that gross profit is just for you to have an idea of, okay, this is what is actually an hint of what is coming, but there are still some things that still needs to be deducted for you to get your net, because that net profit is actually what is landing in your hand. Do you understand that you can actually, so your net profit now is when you now calculate that gross profit you've gotten now minus the overhead costs. So we're going to do a calculation of that. So if you have your pen and your paper, this is the time for you to learn. So because I see a lot of people say, okay, how do I calculate? How much am I supposed to charge? Nobody can do that for you. You're the only one that can do. You know, whether you're working from home, you don't have rent yet, or maybe you assume that you don't have rent yet, or you know your office space, you're paying 1 million in a year. Maybe your shop is in VI or Lekki and you're paying 1 million for rent per year. Of course, the price of my goods, my headwear is going to be different from yours, because you are paying so many things. So you have to factor it, or you have to factor them into your cost, your price, your sales price. Do you understand? So now, I'm not an accountant, so please, if I don't say the right terms, so just take it like that. I'm a chemical engineer, so I'm just trying to make this easy for us. Okay, so now let's assume that in a month you have sold 20 units, 20 headwares. So write that down. You have sold 20 headwares, and that's cost per production, or unit cost, unit sold. Then you have your selling price per unit. Maybe for each headwear now you have sold it 50,000. I'm only assuming. Let's assume that you have made a very sophisticated headwear for 50,000 naira, and then for that month you sold only 20 headwear. So you know that your total revenue for that month is 1 million. That's 20 times 50,000. That's 1 million. Do you understand? So most times we actually sit down, you have actually sold that 1 million, but you are not seeing, because there are so many things that you keep paying for. Your nylons are finished, you go and buy another one, you need to print nylon, you need to pay for this, and then at the end of the month, of all the headwears I sold, where is the money now? Do you understand? So that means there are some things you need to put in place. So your total revenue for month of January is 1 million. How did you get to 1 million? How did you get that 1 million? I'm repeating it again. You have sold 20 pieces. That's the number of units you have sold. 20 headwears, and then you have sold them for 50,000 naira. That's 1 million naira. So that's your total revenue. So now your cost of production now for those 20 headwears. So now you need to sit down and calculate how much materials for all those 20 headwears. You need to write, these are the amount of material I bought. Maybe I bought a material of 200,000. Then your packaging, maybe 30,000, maybe nylon and all that, then labor and all that. Maybe you need the work customer, you need to get somebody, okay, just come, I'll pay you 10,000 or something. Do you understand? So just factor. So all your cost of production was 250,000. Do you understand? So now your gross profit now, that's your profit. So now let's calculate your profit now. So your gross profit now is total revenue, that is the amount that have come in, minus your cost of production. The amount that came in, all the total money that came was 1 million minus your cost of production. What's your cost of production? 250,000. So 1 million minus 250,000, that's 750,000 naira. 750,000 naira. So that means you have your gross profit is 750,000, but that 750,000 is not your profit. Like is your profit, but not everything. That's not your net profit now. Okay, so how do you now get your net profit now? So let's do a calculation of your overhead costs. So let's assume that your overhead cost is 150,000, but sincerely, that your overhead cost, if you look at it, is actually more than that 150,000, but I'm just assuming. So your overhead cost now. So when I say overhead cost now, so now in that month, you have put in factor, you have already calculated your rent. Do you understand? Maybe your rent in a per month is 30,000. That due, you have paid 20,000 naira for a year for your due. So you divide that 20,000 divided by 12. That 20,000. So if you are dividing it by 12, maybe you get 2.5 2,500 or 3,000. So that 2,500 now. That is your what? Your rent. That's your due for that month. I don't know if that is clear. Your tax now, maybe you have paid 10,000 naira for tax. The IRS or trade permit that collected 10,000. You have to divide that 10,000 divided by 12. That's maybe like 900 naira. I'm sure it's not up to 1,000. That's 900 naira. You had that. So maybe by the time you calculate all your overhead costs for that month, so you must be able to do it on a monthly basis. So make sure everything you are doing, all your costs, divide them by 12 for you to know your monthly overhead costs. I hope that is clear. Maybe your utility now, you are paying it monthly. You are buying it monthly. Maybe you load 5,000 every month. Your data, you load 10,000 every month. Your transportation every month is 10,000. So you calculate all those your overhead costs. So if your overhead cost is 150,000 naira per month, so now to get your net profit, now we have calculated our gross profit to be 750,000. How did we calculate our gross profit? That's your total income. That's 1 million minus your cost of production, 250,000. That's 750. So that 750,000 is your gross profits. So that gross profit now minus your overhead costs. Let me repeat. Your net profit now is your gross profit minus your overhead costs. That's 750,000 minus 150,000, and you are left with 600,000. So 600,000 now is what you have. So that net profit, okay, this money now, that's 600,000 of all the 1 million I've sold. I know that I got 600,000. I hope that is clear. So now, so you now divide. So how do you know the profit you have on each headwear? Let me say on an average. You have sold that 20,000 naira now. Sorry, that's an error. You have sold 20 headwears. That is, you sold 20 units of headwears that month. So your profit is 600. Your net profit is 600,000. So if you divide the 600,000 by 20, that means you have made 30,000. So that means that 50,000 naira headwear you sold, your profit on it is just 30,000 naira. Because normally, if you have calculated, for that 50,000 naira, everything, all the materials I bought was just 10,000 naira now. You actually think you have made 40,000, but you have not made the 40,000. You have only made 30,000 naira. I don't know if that's clear. So you need to sit down and do that calculation, and then you know that for each headwear you make, your overhead cost is calculated, is deducted from it. Your cost of production is deducted from it. That makes you understand or have a clear idea of your net profit on each headwear. So how do you calculate your profit margin now? So your gross profit margin now, maybe in a month you want to, okay, maybe my gross profit margin is 20% or 50%. So what do? You calculate your gross profit. What's our gross profit? It was 750,000 divided by your total revenue. That's 1 million. So you do 750,000 over 1 million times 100%, or do you get by 100%, and that will give you a 75%. So your gross profit margin is 75%. So what is your net profit margin? You know that our net profit was actually 600,000. So you just do 600,000 divided by your total income. That's 1 million by 100, and that gives you 60%. So your net profit margin is 60%. So for you to know your profit margin, that okay, my profit margin for each, so you know that as a milliner, I know that my profit margin on each headwear is 60% or is 70%. I don't know if that is clear. So not like, oh, headwear business is very, very lucrative, it's very profitable. Yes, it's profitable, but there are so many things we don't put into places. There's so many factors we don't consider. There's so many costs. So if we sit down and analyze so many things, you know, your cost of, even the cost of materials you calculate, you will not calculate that UHU gum that you are using. Your scissors got spot, you know. So from that overhead cost, depreciation should be there. That is your depreciation of equipment. Maybe you have a sewing machine, it got spoiled, you had to repair it, you know, all those things. There's so many things. Your scissors got worn out, you got another scissors. There's so many things we don't put into places. We don't put into consideration. We change scissors like we are changing water. UHU, you are just using it the way you like. Your glue gun, this one will finish, you put another one. So those are cost of production that we don't even think of. We only think of the materials, maybe the feathers, this. We don't think of the gum you are using, your thread, needle and thread. There are so many things. Your needle, you just find out that all your needles in the shop, boom, everything, you cannot find them again. You have to get, okay, please go and buy needles for me. Or you are sewing, your needle got broken, you get another needle. So there are so many little things that we don't put into consideration, that we don't do the costing. So I always tell my girl, if we buy anything, please write it down for me. If we buy bias, you know, you see these bias here, we can buy it like as if we are buying pure water. Anytime we are walking, just say, oh, my bias, is there red bias? No, go and buy red bias for me. Go and buy, and we don't write down all those costs. We don't actually calculate it with, you know, I'm just remembering something now. You know, this headwear I'm wearing, there's, when I'm done, I always put this felt material. I've never calculated, and that felt material is very expensive. I always put it inside my, you know, it makes it well padded. So like that felt now, it's not accountable for, it's not accountable. Like, sorry, I don't know which word, you understand what I mean? I don't account for it. There's no way it's written down that, okay, I bought felt. So there are so many things that we need to, if we write down our cost, our daily costs, then we will see that our profit margin is very, very low, very low. We think we're actually making profits, but it's very, very low. You can't compare yourself to somebody selling headwears, somebody selling hairs, like all those people that sell attachments. They are not doing anything. All they just need to do is buy the attachment and sell. I don't know if you get what I'm saying. So their profit is, you know, they know that if they are buying it 20,000, all they just need to calculate is what? Their packaging. They're selling it, they buy it maybe 10,000, they sell it 20,000, they buy nylon or what they're going to use to package. They're not working on, they're not doing it, but you do a lot of work and all that. So please, for every millionaire out there, are you actually making profit? Sit down and ask yourself that question, and then this will actually help you. So what are the two lessons I want you to identify? The reason why you need to know this is, I listed out there, I said to identify areas for your cost reduction. So there are so many areas you need to cut cost on. Is it the way you use your UHU glue? Is it the way you just put on this thing and then your unit is just wasting? I used to, when I'm using my iron, I'm not using it, I switch it off. Even if I'm using it, once it's hot, I switch it off. So you have to cut costs as much as you can cut costs. My scissors, I have a scissors for fabric. I have another scissors. So I make sure that I don't use my fabric scissors for another kind of stuff, because so as to make sure that it lasts, it stays a very long time, and then it retains its sharpness. So you have to cut costs. So it will help you look for areas where you need to cut a lot of costs. That's one. And then two, it will help you evaluate your pricing strategy. You know, so not that a customer will just call, you just call, how much is this? And just, okay, 10,000. Price, customer will price it to 5,000. Okay. So it will help you to evaluate your pricing strategy and help you stay firm and say, so when my customers come, I don't know how to say, okay, how much is it? I say 15,000. Say, how much is it? I say, that's the last price. I already give you the price. I don't know how to be doing 2,000, 5,000. That's why I keep telling my customers. I say, okay, when I say how much, okay, and I'll say, okay, since I called you for you, let me say, okay, it's 20,000 now. Let's start pricing it. So so that you will be able to know that in your mind, even if you want to do that method, that strategy, you know that in your mind it shouldn't go less than 15,000. So I pray the Lord will help us in this. So let's sit down